Hello viewers, we'll be going over the Dow Jones. In this video, we'll be going over the day-by-day probability model, the technical performance of each model, how we find the models, comparing the current trend with the trend in the past, and we'll go over the day-by-day forecast for the Dow Jones. So back to the technical analysis, we're currently up 26 basis points on the 1 hour chart. We were at negative MACD, however, we since reversed that this morning. As for the 4 hour chart, we're still looking at sideways action for the 4 hour MACD, and we're still residing along the 9 moving average and 18 moving averages. As for the daily chart, what we have here is we're approaching to near overbought RSI, and we have since converged. That dated back to July 10th, and there's still upward momentum. And the next possible resistance that I see will be around the price of where we had a gap down between June 10th and June 11th, and that gap is around price of 270, and that will be our first immediate resistance to the upside if we do continue this upward momentum. As for support, if we reverse and head down lower, the next possible support will be around where the 200-day moving average and 18-day moving average, the green and purple line respectively. And that is around a price of $262. So that will be our first immediate support if we do head down lower. If we were to head down lower, that price movement to the downside is roughly around 2.6%, and to the upside, that price movement is roughly around 60 basis points. So now let's examine the day-by-day probability model. These models are available in the link below, so do check it out. As we progress to the 5th day or a week of trading, we have a 22% chance for Dow Jones to climb between 0 to 2%. And to the downside, we have a 44% for it to fall between 0 to negative 2%, and a 33% for it to fall between negative 2% to negative 4%. So now let's examine the day-by-day forecast for Dow Jones. So what we have here is 1 day out, that will be a Thursday, and 2 days out will be a Friday, and so on. So we have 3 days out, 4 days out, 5 days out. Which one of these models we should focus on? Ideally, the model that is best matched to the current trend. The blue line is our current trend, and the line overlapping it happens to be the best match. And right here we have our current trend, and the trend below is the trend that we found on the line graph above. And let's begin comparing both trends. And one thing to note, this trend dates back to May 6th to July 31st, 2003. So on the current trend, we start off at the upper middle Bollinger Band and then ended at the upper Bollinger Band. And now in the trend in question, we also start off at the upper middle Bollinger Band and also ended at the upper Bollinger Band. So what we have here is 1, 2, 3, 4, 5 points. And on the trend, on the current trend, we have 1, 2, 3, 4, 5 points. So there's reason to believe that the trends and patterns are somewhat the same. The outcome and forecast should be fairly the same. So the model that we just examined was back in, let's say, and let's see and find it, back in May 2nd, or let's say, actually, it's May 6th to July 31st, 2003. Back then, Dow Jones was down roughly around 1% or 1.10%. If we head back to the day-by-day probability model, that coincides with this standard deviation of 44% chance for it to fall between 0 to negative 2%. So now let's examine the technical performance of each trend. On the current trend that we're in, we're down 3% from monthly high, up 13% from monthly low, up 1.5% from 10 simple moving average, up 2.8% from 20-day simple moving average, and up 4.4% from 50-day simple moving average. Compare that to the trend in the past that we just found. Back then it was down 1% from monthly high, up 8% from monthly low, up 47 basis points from 10 simple moving average, and up 77 basis points from 20-day simple moving average, and up 2% from 50-day simple moving average. So among the two trends, there are technical similarities. And again, these models are available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.